Good morning, Hayden, and thanks for joining us on this Wednesday. How are you doing?
Morning, Gary. Yeah, thanks for having me. Another cracker day in Durban, so yeah, good to go.
Fantastic. Hayes, I think just a quick one. I'd like to find out a little bit about what's going on with the Rand. Last week, the Rand was sitting at 14.50. We've seen a significant strengthening of the Rand in the last week. I saw levels of like 13.97 at some points, 13.99 yesterday. What's happening with the Rand?
Yeah, Gary, it really has been a purple patch for the Rand in the last couple of days, and yeah, it's not unexpected, but the move has been significant. So all good as things stand at the moment. And the best part about it is that it's been a combination of local as well as international factors that have pushed us stronger. Usually it's just the international stuff that moves the Rand, but locally, we spoke about it briefly last week, but locally there's really some good stuff coming through. On the international front, last week and specifically last Friday was all about the monthly US jobs data, and this would have been for April. There's no doubt that the American economy is going through an incredibly robust period of recovery coming out of their COVID slump. But I think the analysts got a little bit ahead of themselves. In fact, I know based on what happened on Friday. The dollar had been creeping up primarily or partly because of expectations that America was going to deliver an incredible number of new jobs in April. The forecast, the consensus was for 1 million jobs. Some of the more bullish analysts out there were calling for 2.1 million, which really is a blowout number. And the higher the jobs number, that would have been dollar positive because that puts more pressure on the Fed to change their messaging, which has been very clear up until now to say that they're not going to hike interest rates until the labor market has fully recovered. And so everybody was watching the US market on Friday afternoon, waiting for this massive historic print to come out. And it turned out that 266,000 jobs were created, less than a third of what they were expecting. Immediately, the dollar fell off a cliff because this just reinforced the Fed's view that they're nowhere near full employment. It's going to take them a bit of time to get to full employment, and therefore they're quite far away from hiking interest rates and tightening monetary policy overall. So yeah, the Rand really got its skates on. We went from 13.37, 13.40 to 14.04. 14.40, 14 to 14.04. In a heartbeat. So that was good for us. The second major event on Friday was on a local front. Moody's was scheduled to deliver their latest credit rating assessment for us on Friday evening after our local market closed. There was a little bit of nervousness around this because Moody's, they've got us on a negative outlook in terms of their assessment. Negative meaning that their next move is more than likely going to be a further cut into junk territory. They're not beholden to make an announcement, and as it turns out, they didn't say anything. No report was forthcoming. In this case, it was one of those ones where no news is good news, because while first prize would have been a move from negative to stable in the outlook, at least we didn't get cut, and that supported the Rand. And then, not wanting to wade too deep into the political quagmire that is politics around the world, but definitely in South Africa. But we had the ANC's NEC meeting over the weekend. Cyril Ramaphosa came out strengthening his grip on the ANC. Its headlines across the country, that Ace Magashule has been suspended, and he tried to do a little fight back, which didn't quite work. There's others that have been charged with corruption that have also been suspended. And at the end of the day, it's market-friendly developments on the political front. So yeah, that saw the Rand push to 14 and below.
That's brilliant. So the stars have aligned. I mean, that the South African Rand now is probably the strongest emerging currency at the moment, emerging market currency at the moment. And the big question is are we going to see more Rand strength coming forward, or do you think there's going to be a potential swing in the opposite direction?
Yeah, we've come a long way, and there's no shortage of articles out there across local news outlets, beating the drum, 30%, 35% gains against the dollar over the past 12 months. Of course, a bit of a tricky stat to throw out because COVID sent us so far down this time last year, but a healthy gain nonetheless. I think it's always difficult when you make huge leaps forward like we have done. Those incremental gains from here become a little bit more difficult to achieve. But at the end of the day, the good news from where I'm sitting is that it's quite possible. I'm not going to go into them in as much detail as I did last week, but the positive pointers locally, or the list of positive pointers, is growing longer and longer. We've had March's record trade surplus of 57 billion rands in trade surplus for the month. That is more than likely going to be followed by further trade surpluses into 2021 as our commodities continue to be gobbled up abroad. We've had SARS saying that they've collected more tax revenue than they thought they were going to. Again, that's rand positive, especially when it was confirmed later on that government was going to reduce their auction of government bonds out in the market, so borrowing less because there's more cash in the coffers. Moody's didn't cut us into junk status. We just covered that. That's another positive for the rand. We'll see what S&P and Fitch do, but they tend to move in unison, these credit rating agencies. So fingers crossed we get a reprieve from the other two as well. We've got those market friendly developments in the ANC that we've spoken about, but most importantly, off the back of that, is there hasn't been any huge fallout, no major fireworks following the suspension of ACE and a couple of others. Unlike the fearmongers out there were talking about the streets burning and a massive revolt being driven. None of that as yet, so that's good for the rand. And then it's not all about local developments. We've also got the dollar, which is on the ropes right now. Currently, well, until this morning, sitting at 2.5 month lows. The Fed been very clear in their messaging, saying that we're not going to hike interest rates, we're not going to taper our bond purchasing programs, and market data in the States at the moment seems to be backing up their message, which sets the scene for further dollar weakness as the rest of the world accelerates their recovery and become attractive destinations for investment, which draws money away from dollar-based assets. So yeah, 1380s, 1370s, who knows? We could get there. Anything's possible, but at least we've been given the tools to improve from here.
Yeah. So then we've got all this good news out there. Are there any potential potholes for South Africa that we should be looking out for?
Definitely. Unfortunately, it's never just plain sailing, and there's a couple of items that we've got to keep our eye on. Of course, in my mind, the biggest threat today and for the foreseeable future is still COVID. It hasn't gone away. It's still out there in force in various areas around the world. Of course, India right now, total state of distress. They recently set a daily record high of infections at 420,000 people on a single day. I mean, it's just a staggering number. And they're in and around the 400,000 mark. Hopefully they're able to put a lid on their daily infection rates at some point, but we all know that the daily death rate lags by 2 to 3 weeks in the nature of the disease. And yesterday they set their death rate record at 4,200 deaths for the day, which is a terrible number, and unfortunately more than likely to increase. Taiwan just this morning announced that they've got 6 clusters, COVID clusters that have popped up they're trying to deal with. We saw the Taiwanese market fall by 5% and their currency come under pressure this morning. So COVID's out there, and that sort of fear factor creates a risk-off environment, which is good for the dollar, funnily enough, as a safe haven asset, and bad for the rand as a risk-based currency. And if we look locally, there's a couple of headlines that are popping up about getting ready for the third wave. Whether it comes or not in meaning is up for debate. But I had a quick look at the stats yesterday. Our 7-day moving average, which I think is perhaps one of the key barometers to look at rather than the daily stats, because those move up and down. But the 7-day moving average in early April was 780 new cases a day. It's currently sitting at 1,800 new cases a day. So there's a marked improvement increase in that metric, which is still under control, but if it goes higher from where we are now, that's a concern for us as a country, but also for the rand.
Yeah.
We've also got inflation fears in the States has seen a sell-off in the US equities. Their market sold off heavily last night. It was the third or fourth consecutive day of selling. That has spread to the global market. Europe took a bath to a degree yesterday. The Asian markets right now are under pressure. This creates a risk-off environment. And again, positive for the dollar, negative for the rand. And in fact, while we've seen the dollar-rand exchange rate move up to 1406, 1407 this morning from the 1395s yesterday. And then lastly, while it's contained to the region, there's been some disturbing images coming out of Israel. Hundreds of rockets being fired in the Gaza Strip. 38 people, I believe, have lost their lives so far. Hundreds of injured, people being treated in hospitals. Buildings getting blown up left, right, and center. I mean, it's an age-old story that flashes or flares up from time to time. But at the end of the day, geopolitical risk is dollar positive as a safe haven and rand negative as a risk asset.
So in summary, the dollar weakness has been there, but there are potentials for dollar strength. The rand strength has just been phenomenal in the emerging markets. And with the rand strength now and the sell-off of equities, it's actually a good time for investors to look at investing offshore because they're getting good bang for their buck, literally, in terms of equities, and they're getting a reasonable exchange rate. I think the last time I saw 1405 was like January last year, pre-COVID.
Yeah, so you're exactly right. So in fact, the 2nd of Jan, which 2020 was the recent strong point for the rand. I think we had 1398 on the 2nd of January 2020. We eclipsed that yesterday at 1395. So we're definitely in pre-COVID territory. This is, to my mind, if people are looking to externalize a portion of their wealth and invest offshore, this is a buying opportunity to load up on dollars. And you're exactly right. I'm part of our investment committee here at Foundation Fund Managers. We've got a war chest of dollars sitting in our investment accounts overseas in Switzerland, waiting to be put to work. The market has been sitting at record highs, the US market that is, for some time. We've been waiting for a buying opportunity, and it looks like that's materializing right now. We've got our triggers in the market waiting for a couple of levels to be hit in terms of the pullback. We're almost there. I would have thought that this week we will be putting that money to work. So yeah, if people are looking to get invested offshore, it's cheap to buy dollars right now, and it's cheap to get into equities as well.
No, that's fantastic. Hayden, thank you so much for the insight for the week. Thank you to Foundation Fund Managers and your team for the great work that you guys are doing. And we look forward to next week, Wednesday, when we can catch up and see what's happening in the world.
Brilliant. Thanks, Gary. Catch up next Wednesday.
Fantastic. Thank you. Have a good week.